Hey guys, so I set up a challenge on Twitter. I did this last year too, but of trying to pick a stock at the beginning of the year that goes up, 10x or 5x or some multiple. Um, so I wanted to go through like how I came about with like what I'm gonna target for this, and you'll understand why this is not something that you can really put your entire account into when you have a large account because these things are they don't have enough shares. But well, I guess the first thing we do is we should look at the ones that we had last year. So last year we had Elevate, which actually moved pretty early in the year. It went from 50 something cents to $5. So that 10x. We had Terra, which actually moved twice. It moved in 2023 partially. That's when it started, and then it just moved again recently, where it moved from $1.50 to I forget what the top was here, but it was more than 5x. And we also had Eldon, and again, Eldon from January moved from about $1.80 to I think it hit $6 actually, so not quite 5x there. And the other one that I remember from last year was Pixis, which Pixis moved. We actually bought it in November or December of 2023, and it moved from roughly like $1.50 to $6.50. So not 10x, but 5x still. So I did what I do every year. I went through and see if I can make this thing work here. I went through and I ran code to figure out what all the stocks were that had run. The data that you're looking at now is just for the NASDAQ, but it's not most of the stocks you're going to play in NASDAQ anyway. So between long and short last year, there were 253 stocks that made, that were multi-baggers. So what I've done is I've broken these up. Here they all are. Just to make it simple, here are the large caps that did. So you had Hood, Mezzo, Palantir, Tesla, and then of course Nvidia. These are by share count versus by multiples. So Nvidia, it looks like from this chart, made 230% or something like that for the year, and then the big one was MESO. So in order to try to find these stocks, you have to figure out what criteria to screen for, right? Because you're not going to be able to go through the entire market. I mean, just in the NASDAQ, there's 13,000 listed equities. So if you look for the entire market, it's going to be an impossible task. So let's just sort of generally look at this stuff. So most of the stocks that have run are roughly speaking, let's say around 20. Actually, I have the data. Let me just look at the data here. So the ones that have run the most are going to be, roughly speaking, less than like 60 million shares. Okay, you can target the extremely small ones, but the stocks that have very, very small share counts, you're not actually going to get a significant position. Like if a stock only has 400,000 shares, like if you try to buy 40,000 shares, you're going to cause the stock to move. So you basically want to make something that's liquid enough that you can get into a fairly significant position based on your port size. So, I mean, you could say maybe, well, let's just do it from like 100 million down. So there's enough in that range where that gives us a good starting place. And we're looking for debt to equity ratios that are basically zero. You're looking for, which from a model perspective, you're looking for a green stock. Okay. And then from the earnings per share, you're looking for stocks that do not have earnings. I mean, that's pretty intuitive. It's pretty rare that a stock that actually has revenue is going to be cheap enough that any change in that company's state is going to cause it to go up 2 or 5x. I mean, the rare examples would be Nvidia. I don't actually think Palantir had earnings at the beginning of the year. So that's the target that we're going to be looking at. So let me go back. And let's set up a scan to try to find those criteria. So we're looking for less than 100 million shares. And I'm going to arbitrarily say, let's pick 5 million. I don't know how big your ports are, but that's probably enough. I didn't actually do any analysis for price, so let's just get rid of that. We want something that is green, and I'll leave the bands blank for now. And it doesn't really matter what sector. The sectors that tend to move the most are going to be healthcare, which I can't see right now, and technology, okay? So let's just look at these. Now, there's a couple things that you're looking for here. You can buy a stock that is actually moving legitimately, like something that has good trial results, or something that goes from not having positive revenue to positive revenue, like Palantir last year. Or you can be looking for a stock that just has some shady people involved and it's just going to move because they need to raise capital, right? So for a stock like AADI right here, right? So you've got a bunch of green bands here, a bunch of fairly high risk events as well. You can see that the stock has already started to move. So a stock like this, if any of these trial results turn out to be good, you're likely to actually get a big move here. This is already up maybe 150% so far since August. Now you know that this particular move right here is because of liquidity, because of these 13 Gs, right? So two institutions bought shares off the market, that drops liquidity, you start to get this general push. So that is a potential mover here. From 3, it would have to get up to $12, which is considerably out of the bands, but you're basically still talking about where it was at its last consolidation event. So that's possible. And then you have the other option is if you're looking for stock that is just going to do something shady. So you're looking for something that is going to be a predicted volatility event and something like this, okay? So here's ARB. This is actually in volatility. It's already moved a bit. It went from, looks like 30 cents to $1. So it's already had a 300% move. This is not recently healthy, but it is healthy now. So what you would want to do for this stock is you want to check and see if they have recently diluted. I'm not familiar with the IoT group here, but if they haven't diluted, this is a situation where it's likely that these volume bands are actually trapping shorts. I mean, these are pretty massive volumes. You had 2 days over 200 million shares, which is 10 times the OS, right? More than 10 times the float. So this is a situation where there could be a short squeeze here. I wouldn't put this on one of my 4 that I would choose, but there is a potential for this. Now, if they have diluted already, then obviously this is just going to collapse down. So let's check and see. So I don't see, unfortunately, this is a foreign listing, which makes it even more complicated because the share counts can be wrong. So, but there wasn't a 424 filed here or an S1 filed, so it doesn't look like they've actually diluted. But again, because it's a foreign listing, it's going to be a little bit more difficult. So that is how I would go about looking for the 4. Now, I don't like to play volatility events. Like I don't play FSTs because they're so unstable, and because you basically have to catch the spike in most cases unless you're playing a short squeeze, and short squeezes are really hard to predict because you don't know what the intentions of the people who are running the stock are. And a lot of these investment banks, they could have short positions that they're just going to cover in an offering. So there's no guarantee the stock is going to go up at all. So what I'm going to do is I'm going to filter on recent 13 Gs, okay? So this stock, RVPH, this is being run by a Twitter pumper for sure. It actually tripped liquidity a couple weeks ago, and then it spiked. They did an offering. They did dilute. I'm actually really familiar with this because this guy is the guy running it. Their offering was a 3-for-1 share, which is not very healthy for the stock. So I wouldn't put too much faith in this that it's going to continue, but it's possible. If this event, which we're showing as a pretty high risk, if that event were to actually be good data, you'd likely get a good short squeeze there. Because whenever you have a bonus warrant offering, and this warrant offering was it was 2 warrants per 1 share. So you got three shares for the cost of 1. Whenever that happens, you're going to get heavily shorted, which is what happened here from the spike down. So if these shares stay short, any news here that's positive, it could cause this to take off. So that's a potential. Here's ASMB. ASMB, it's already up considerably. I don't know what my cost is, but my cost is under 10. It's probably under 11 for this one. So it's already moved from about 9. It hit 20 at some point, or 19 at some point intraday here. So, but they just had a 13G file. This was related to, I forget which biotech, Gilead or someone took on a position. So that's what this dot is. So in order for this to make 10x, this would have to go to 150 bucks, which is really unlikely. I mean, I could see this hitting 40 or 45, but that seems a bit too much. So we're looking for something that's going to be ideally well below the bands and that has started to curl. And this is one of the ones that I would put on my 4, which, as you can see right here, it's below the bands. There was a volume event here. This was actually a partnership deal that was coming out. You can see it's already started to curl. This move here, I think, is close to 100% already. But in order to just get back to EM1, and EM1, remember, it's the peak of where we expect herd pressure to be. So if you've got a Gaussian distribution, which it's not, it's actually like a weird skew distribution, but think about it from a Gaussian perspective, then EM1 is the top. So this has to go considerably higher, from 169 to, let's say, 7, just to get back to that peak herd pressure. So there's a pretty good chance that if this gets some good news, that this could make 5x or 10x. So this would be one of the ones on my list of 4. But I hope that explains like the thought process of how I go about this. There are other ways to look at this. You can filter based on options, and then what you can do is you can look for a stock that is consolidation trading right before earnings. I'm trying to think of one that'd be easy to show. Hold on a second. There was one that we found about a month ago. Yeah, here it is. SRFM, this one. Okay. So this trading pattern right here, there's actually 2 events. When this starts to get this sawtooth flat pattern, that's typically when consolidation is happening. So this actually had consolidation volume and then reconsolidation right before it took off. This is the one that Palantir bought. So this is the one that I think is actually a reciprocal income situation where they're loaning money to the company so that the company can buy services from Palantir. So it's kind of a revenue stacking sort of deal. But anyway, so since this consolidation trading here, you can see the stock has gone up considerably. It's moved from $1, I think it was like $1.50 when we found it, and it's now trading at $6. So you're looking at a 400% move there. But if you can find an extended period of time of this consolidation trading on a stock that's optionable like this, especially a stock where there's been liquidity changes, you can probably make your 5 or 10x play on an options trade. So Vimeo is an example of that. Like all of these little liquidity events, if you had played options on the events, like you'd have to have gotten it right before this one. But that move right there, that 50% move, that would have been between 300 and 500% on an options trade. So you can look for stocks like this as well. All you have to do over here is you're going to be looking for recent liquidity events, and then we'll just look for the whole market. And then we'll search by liquidity events here. So we've got Hook. This one is definitely looking like they're trying to short squeeze. The FST here is when they need to raise, but I don't know. They haven't been very forthcoming about when data is going to come out, so it's hard to time this one. But anyways, so there's a bunch of stuff here that has had an FST. I actually talked about this one earlier in chat. So things like this, if the FST were to show up with an options play, you could get 5 or 10x out of them. But it's difficult to know when liquidity is going to change this early. So this is something you'd pay attention as you go through. But in terms of what I think is likely to make a big move now, that likely to make a big move in 2025 that I can see now, stocks like this are what I would target. All right, guys, have a good weekend.